EHang Holdings is a company that manufactures and sells autonomous drones capable of carrying passengers and cargo. They have just announced their financial results for the fourth quarter of 2025. In this video, I will walk you through those results and discuss their guidance for the upcoming year. Everything I say over here is not a financial advice. Please make sure you do your own research. Let's start by looking at revenue and deliveries. The blue bars represent revenue and the gray line shows the number of deliveries for their passenger autonomous drones. Please note that the revenue is represented in RMB, which is the Chinese currency, so I will convert it to USD. In the fourth quarter of 2023, they managed to sell 23 drones with revenue totaling $8 million. In the fourth quarter of 2024, they've sold 78 drones, generating $23 million in revenue. That's almost a 200% increase year over year, both in number of units delivered and in revenue. Now, when it comes to their annual results, we can see that they delivered 52 units in 2023 and 216 units in 2024. Revenue for 2023 was around $16 million, while in 2024 it reached $64 million. This means that when comparing the full year results, both revenue and deliveries grew by about 300%. Now, if we look at their orders record, we can see that the companies that ordered autonomous drones are primarily using them for tourism. There are many other potential use cases for these autonomous drones, such as transporting heavy cargo and air taxis. However, they are currently waiting for regulatory approval before they can start using their drones for taxi service and cargo transport. As of now, EHang is working to get official approval from China's Aviation Authority, or in short CAAC, to operate air taxis and other autonomous flying services. This means their self-driving drones could legally carry passengers for things like urban transport and tourism. They have passed key inspections and now they are waiting for the final approval. Now, when it comes to important milestones that EHang is trying to reach, they have emphasized three topics on their shareholders' presentation. The first one is operator certification, which basically means that EHang is working to get an official approval from China Aviation Authority to operate air taxis and other autonomous flying services. This means their self-driving drones could legally carry passengers for things like urban transport and tourism. They have passed key inspections and now they are waiting for final approvals. Now, when it comes to infrastructure, EHang is setting up spatial takeoff and landing hubs in cities like Shanghai and Shenzhen. These hubs will serve as airports for their flying taxis. The third milestone they have emphasized is talent training. This is a brand new industry that EHang is working at, so they're partnering with a top aviation university in China to train pilots, technicians, and operators. Even though their drones fly autonomously, experts are needed for maintenance, monitoring, and customer service. Now, this year they've started talking about production capacity. As of now, they haven't really made a lot of units, but now they are expanding. So EHang is expanding its Yangzhou manufacturing base in south of China. They are moving to phase 2. Basically means they are going to add 24,000 square meters with a goal of having the production capacity to produce 1,000 units in 2025. And lastly, when it comes to their financial results, it's important to mention that EHang has reached positive cash flow from operation for the first time, amounting $22 million. This marks the first time they've achieved this milestone. It's also worth noting their gross margin decreased slightly from around 64% to about 61%. Now, when it comes to guidance, EHang is forecasting revenue to increase by around 100% by next year. That means they are expecting revenue to be around $125 million. And they're also forecasting an increase in capital expenditures and operating expenses. So to wrap things up, we can say that EHang had a strong year, showing solid growth in units sold, revenue, and positive cash flow from operations for the first time.